So the topic we want to discuss today is about multiple taxes in Nigeria. Multiple taxes in Nigeria. What do you understand by multiple tax? Multiple taxes. According to the material I sent to you, multiple tax. This is a tax regime under which various or similar type of taxes are imposed on taxpayer by different tiers of government. Let me repeat again. Multiple tax. This is a tax regime under which various and similar type of taxes are imposed on taxpayer by different tiers of government. What we mean by that is different tiers of government, federal government, state government, and local government. They are collecting tax on a particular income, on one on single income from the same taxpayer. Out of the income, somebody receive income of 1 million naira. Federal government collects its own tax, state government collects its own tax, and local government collects its own tax. It means where taxes is collected on the same income by different tiers of government is referred as multiple tax. Practical example of that is when you import goods, you are an importer, you import goods. When the goods reach Nigeria, you are going to pay custom duty before you can clear the good from the port. Apart from paying custom duty, you pay some duties, MPH charges, Nigeria Port Authority. They also impose some charges apart from custom duties. Aside that, when you clear the good from customs, you are proceeding. Lagos State government, they also collect their taxes. They call it environmental pollution tax. That this truck, the truck that is helping you to convey the cargo from the port to your own destinations is causing some environmental hazard, environmental pollutions. So they will collect their tax. So when you reach your warehouse, the destination that you want to offload the goods, local governments too will send their own touts that before you can offload, though, you need to pay them. That one is clearly practical examples of multiple tasks. So multiple tasks simply means similar type of taxes or same type of taxes are collected by different tiers of government at the same time. Type of multiple taxes. What are the type of multiple taxes that we have in Nigeria? Multiple taxes is mostly common within the local governments. They are the ones that practice multiple taxes most. So we have different type of multiple taxes. Number one, entertainment tax. Number two, road tax. Number three, refuse collection tax. Market taxes and levy. Loading and offloading levies. Sales tax and car park fees. So let me talk on some of the types. Like number one, which is that entertainment tax. This entertainment tax, which is the number one, is a multiple tax in a sense that when you go to cinema to go and watch a movie, we have Nigeria Censor Board. They will collect their own tax on that your ticket that you purchase. Aside that, Lagos State too has their own Lagos State Cinema and Censor Board. They also impose tax. So in one ticket that you buy for you to watch a movie, you pay two different type of tax. One is collected by federal, while the other one is collected by Lagos State. So that is typical examples of multiple tasks. Road tasks, road tasks, all these commercial buses, most of the commercial buses, they will register under Ministry of Transportation with the states, and they are expected to be paying some daily levies to states. Aside that, local government, the local government that they operate, that local government will also try to be collecting some levies from them. It can be daily, and they will have to register before they can even operate. They have to register apart from them register with the state. They will also register with the local government that they want to operate. If they don't register, they will arrest them. So this is another type of multiple taxes. Other one that we need to look at is sales tax. Sales tax. Other type of multiple taxes that we can look at is sales tax. What do you mean by this sales tax? Federal Inland Revenue Service, they collect sales tax. Their own sales tax is the value added tax. It's being collected by federal government, which is Federal Inland Revenue Service. Secondly, there is another one collected at the states. We call it consumption tax. Consumption tax, some state pays collect consumption tax on goods and services that you purchase, especially consumable goods, like most of the goods that you purchase in eatery, you pay consumption tax on them. Apart from federal government collecting VAT, you also pay consumption tax on them. So Lagos State is the first state that introduced consumption tax in Nigeria. So they look at it as one of the means of generating revenue. One of the means of generating revenue. Because they believe that these VATs that they are collected, the VAT collected by federal government, 65% of the VAT collected by federal government, even 70% of it, is coming from Lagos State. But at the time of sharing of the VAT, Lagos State believed that the federal government will share it among the 36 states, and they will also collect their own shares. So Lagos State now think that we are collecting most, it is from our states. You federal government, you are collecting most of this VAT. You don't pay us very well. So they have to introduce consumption tax. When Lagos State introduced consumption tax, 2 years later, some states emulate such policy. Consumption tax is created through state law. It's not by federal law. It's not stated in the Nigeria Constitution. It's created by the state law. It's passed by the State House of Assembly. So Ogun State too, they have started consumption tax. Osun State have started. Delta State have started. As it is presently, we have presently now about 8 states are collecting consumption tax. So sales tax is another example of multiple tax. Now, let's look at causes of multiple taxation in Nigeria. What are the causes of multiple taxation in Nigeria? What are the causes? Why do we have multiple taxation in Nigeria? Number one, lack of funding. Lack of funding, particularly for most states, may result into multiple tax. Some states, they don't have adequate revenue. So they have to look for a way of generating more revenue. This lack of funding is also affect local government. Local governments, they don't have enough revenue. Most of the revenue accrued to local government is being controlled by the state. Their share of FAC, share of local government statutory allocation account coming from federation account is being collected by the state. Local government don't have access to it. So as a result of that, because of lack of funding, most of these, some of these tiers of government has to look for other means of generating revenue. So that means other means of that generating revenue can now result into multiple tasks. Another one is lack of tax education and awareness. Most of the taxpayers, they don't have awareness. They are not educated enough. They have paid tax on their income. State have already collected tax on their income, which is maybe income tax. Why will local government say they should come and pay tax again? They are not aware. They are not sensitized. They don't know their rights. Secondly, that this lack of education, lack of tax education and awareness. Most of the taxpayer, they are afraid to challenge the status quo that they by saying that let me take these people to court. Why am I paying this type of tax? I've paid tax before now. They are looking at if I take them to court, I will be witch hunt. Do you understand? So that one too is one of the reasons that we have multiple tasks. Another causes of multiple tasks, multiplicities of revenue agency. Multiplicities of revenue agency. We have several revenue collection agencies, even at the federal level, several revenue collection agencies. So so most of these revenue collection agencies, we have to say, let me look for a way of generating revenue. They will be given targets. FRS is a revenue collection agency. Nigeria Custom is a revenue collection agency. NIMASA is a revenue collection agency. FAN is a revenue collection agency. So all these revenue collection agency, because they are multiplicity, it can result into multiple tasks. One of the on this multiplicities of revenue agency of as last year, federal government set up a committee called Tax Reform Committee. One of the mandate of those tax reform committee is to merge all the revenue collection agency together by saying that it's only FRS that will be collecting any revenue accrued to federal government. Custom don't have responsibility of collecting revenue. Their own is to enforce. Likewise, NIMASA. Likewise, FAN. Only FRS should be saddled with collection of revenue in Nigeria. So that is one of the mandates of those reform, tax reform. We call them tax reform committee. As I'm talking to you right now, the committee are still working based on their mandates. Another causes of multiple taxes, overlapping taxing rights as contained in the constitutions. Overlapping taxing rights. We have taxing rights of each tiers of government. Taxing right means what are the type of taxes by which each tiers of government can collect. Federal government have their own tax that the taxes and levy that they can collect. State government has, local government has. Overlapping taxing right means when state government is now collecting the type of taxes that should be collected by local government. So that one is already overlapping taxing rights. Example of that, tenement rate is a tax collected by local government. But in some states, as a means of generating revenue, they modify tenement rate. They modify it into what is called land use charge. And they are now collecting it. Example, Lagos State. Lagos State now, we don't have anything called tenement rate again. Since 2000 and, I think 2004, We don't have tournament rate again. We have what is called land use charge. That land use charge is not stated in the constitution. Is as a result of state modification. State has to say, local government, stop collecting tournament rates. Let us help you to be collecting it. But by that, as I'm talking to you today, they modify tournament rate into land use charge. Why some local governments will still be saying that, they will be collecting tournament rate too. How can property owner pay tournament rate, also pay land use charge? It can't be possible. But some local government in Lagos State, they have started that because they said tournament rate is stated in the constitution, is their own collection. Another one is manual tax administration system. Manual tax administration system. Manual tax administration system. What do you understand by manual tax administration system? The means of collecting tax is manual, it's not automated. We don't use technology to collect tax. If you are collecting tax manually, we can result into multiple taxes. Company can pay different type of taxes on the same income manually. But if it is automated, it will be in record that this company has already paid this tax again. If state has collected the tax, local government will not come and collect it again because our tax system is already automated. So those are the causes of multiple taxes. So the next heading that we have is method of collection of multiple taxes. What are the methods that we use to collect multiple taxes? Ideally, there are two methods of collecting multiple taxes in Nigeria. Number one method is mounting of roadblock. Mounting of roadblock. Some local governments, when they want to collect the multiple taxes from transport, from this, they will mount roadblock. They will mount roadblock. When they mount roadblock, they will stop your bus. If your bus is commercial or you have a bus that you are using for your business, they will, can they check your documents? And they will look at the type of taxes you have paid. At that point in time, they'll ask you that you have not paid so tax. So mounting of roadblock is one of the means of collecting multiple taxes. Second, the use of revenue agency or consultant. This one is very common. Federal state government can say if they want to collect multiple taxes, they can partner with Nigeria National Union of Road Transport, NURTW, that please help us collect this type of taxes from motorists. Secondly, the state government can engage some agents, revenue consultant, by saying that we give you target, go and collect this type of tax from the taxpayer. This method of collecting multiple taxes. Now, let's look at impact of multiple taxes in Nigeria business, on Nigeria business. What impact does multiple taxes cause to Nigeria business? Multiple taxes can make business operation to become very cumbersome, such that the owner may begin to evade tax payments in order to survive. Yeah. Practically, most of what we are facing this time around, one of the causes of inflation, increase in prices of goods and services like we are experiencing presently now, is because of multiple taxes. Custom increase their tariff, exchange rates. The federal government introduced VAT again. All this is multiple taxes. So, impact of multiple taxes on Nigeria business. Number one, like I said, is it make businesses to be cumbersome. Business will be very cumbersome, will be very difficult to operate in Nigeria. And again, If business is difficult, those who are operating the business, they may want to evade tax. They will not want to pay any tax at all because they believe that the amount of taxes they are paying is too much. Likewise, let me kuku or evade. And we know that tax evasion is illegal, eh? It's criminal. So that is that. That is one impact of multiple taxes. Another impact, multiple taxes result into high mortality rate of SME in the country. Most of the SME, small, medium enterprise, most of them, why they don't survive so long, why they normally close up so long, is because of multiple taxes. It's because of multiple taxes. It's because of multiple taxes. That is the reason why most of them in Nigeria, they normally close up early. They normally liquidate because of multiple taxes. Federal government will collect tax, state government will collect, local government will collect. So at the end of the day, they will not be able to make profit that will sustain such kind of taxes. Eh? When a company results into loss for more than 4 years, they don't have any option than to say, okay, let us close up. Let's cease. Again, number three, the cost of multiple taxes will reduce the size of capital stock and aggregated output in the economy. It also discourage investment in productivity and enhance measures. What that one mean? Most of the foreign investors, they will not multiple taxes. What this one means is that multiple taxes will reduce foreign direct investment. Most of the foreigners, they will be afraid to invest in Nigeria because they will think that if you want to invest in Nigeria now, Nigeria have different type of taxes. A lot of multiple taxes is going on. Secondly, those who have invested in Nigeria, they would like to divert their investment. Eh? They will move their investment out of Nigeria. Of recent, most of the company, medical and pharmaceutical company, they are relocating out of Nigeria. They are moving to the neighboring country. One of the problems that they said is because of multiple taxes. They pay a lot of taxes in Nigeria, which does not commensurate the profit that they achieve. So those are the impact of multiple taxes. Another impact is the high tax incident and associated administrative burden encourage informality to reduce visible to tax authority. So those are the impact. Another impact that I failed to mention in this material is multiple taxes can result into high rate of loss of job. Most of the company, once they fold up, the result in that they will lay off their staff. There will be high rate of unemployment in Nigeria. Multiple taxes will cause that too. The rate of unemployment in Nigeria will increase due to multiple taxes. So now, solution to the problems of these multiple taxes. What are the possible solution, recommendation for us when we have multiple taxes? What are the possible solutions or recommendations that can reduce this incident of multiple taxes? Number one is local government autonomy. Let local government stand at their own. The revenue accrued to local government, it should not be given to states to share among the local government. The revenue, the statutory allocation of the local government should be paid direct to the local government accounts. So local government autonomy is very key. It's one of the possible solutions to problem of multiple taxes in Nigeria. Let local government stand on their own. Don't let local government be dependent of states. By that time, local government will have more revenue. They will not be introducing some new taxes that are not stated in the law that can result into multiple taxes. Secondly, adequate funding of various agencies and departments of the state government. Various agencies and departments of the state government should be adequately funded so that they can stand on their own. If you fund them very well, they cannot introduce any multiple taxes. Secondly, review the constitution to address overlapping taxing rights. The constitution of 1999 should be reviewed so that all these overlapping taxing rights can be addressed. Another one, limiting the number of revenue agencies. We should reduce the number of revenue agencies. Again, the use of technologies is also one of the means of providing solution to multiple taxes. Automated tax collection process. By using IT to collect tax, it will reduce multiple taxes in Nigeria. Use of IT to collect tax, it will reduce multiple taxes in Nigeria. So the use of IT to collect tax. Of recent, FRS introduced what is called tax promas. States, Lagos State has their own e-tax system. All these automated tax system can address problems of multiple taxes in Nigeria. All this can address problems of multiple taxes in Nigeria. Again, maintain an updated database of the taxpayer. All the taxpayers, they should have updated database by means that we should have a TIN number or taxpayer ID that we can be using to pay tax. Even if we move from Lagos State to Ogun State, we use the same taxpayer ID. Unique, we call it unique taxpayer ID. Taxpayer ID that you can use in any state. You can even use for local government for you to make any payments, any due, any levies. So it's very key. Maintain an updated database of the taxpayer in Nigeria is very, very key. So those are what we can discuss so far on multiple taxes in Nigeria. Any questions, any observations? Let's know. Any questions, any observations?
Sir, please, I have a question, sir.
Okay.
Sir, these multiple taxes, is it the same as double taxation?
It's not the same as double taxation. Multiple taxes occurred within a country. Why double taxation occur between two or more countries? When you talk about double taxation, it involves country A and country B. Do you understand?
Yes, sir.
So,
thank you, sir.
Multiple taxes occur within Nigeria. Okay, any other question? Any other question? So, in the absence of no question, we can now move to the next topic for today, which is talking about tax planning, audit, and investigation. This topic is very important, very, very important, because even last diet, a question was centered on that, tax planning, audit, and investigation. So this is the topic in tax planning, tax audit, and tax investigation. Tax planning, tax audit, and tax what? Investigation. So what is tax planning? Tax planning involve anticipating a set of circumstances and identification of opportunity to minimize or defy or defer tax liability within the tax law. Let me explain in general. Tax planning simply means a conscious effort made by company or taxpayer in order to minimize its tax liability within the covers of the law. That is what tax planning means. Any effort made by the taxpayer to reduce their tax liability within the covers of the law is called tax planning. Aside that, we now have what is called tax planning checklist. Tax planning checklist. What is tax planning checklist? If you want to do tax planning for your company, assuming you are the tax manager, you want to do tax planning for your company, what are those items that must be included in the tax planning? So that is what is called tax planning checklist. Those items that must be included in the tax planning. That is what is called tax planning checklist. Number one, in your checklist for tax plan, list of approved taxes and levy. You are doing tax planning for your company. You need to list the approved taxes and levy that will be paid by your company. My company, they are paying company income tax, value added tax, education tax, consumption tax, information technology tax, police development levy. You do that. When you know is one of the plan. Second is timing of fixed asset acquisition. You determine which time can you purchase your fixed asset. Why do we time our fixed asset acquisition? Why? Why do we time our fixed asset acquisition? Because for us to enjoy what is called capital allowance. For us to enjoy what is called capital allowance. Timing of fixed asset disposals. Which time can I dispose my fixed assets? If I dispose my fixed asset, at the end of the day, I will enjoy what is called balancing allowance. It's one of the tax planning checklists. Another tax planning checklist is filing of tax return. In your tax planning checklist, you should state the time that you'll be filing your tax return. Which time am I going to file my VAT? Which time am I going to file? What is the due date for filing my company income tax? What is the due date for filing my withholding tax? What is the due date for filing my personal income tax? Secondly, part of the checklist, withholding tax deducted properly. In your checklist, you must state it clearly that withholding tax must be deducted on your invoices, on all the invoices you receive from your vendors. You must deduct withholding tax appropriately. You must deduct withholding tax appropriately. Payee monthly remittance. Which time am I going to be remitting my payee? The law said our payee monthly remittance should be 10th of the following month. 10th of the following month. Secondly, VAT return and remittance. Which time am I going to be remitting my VAT? Secondly, National Housing Fund. Which time am I going to be remitting my National Housing Fund? National Social Insurance Trust Fund. Which time am I going to be remitting that? Secondly, you consider rollover relief. All these, they are the tax planning checklists. Please, let's monitor them very well. At least let's know 10 tax planning checklists. 10 tax planning checklists. Let's know that. 10 tax planning checklists. Let's at least know that. 10 tax planning checklists. Aside that, let's now move to introduction to tax audit. We call the topic tax planning, tax audit, and investigation. We have done with tax planning. Let's move to tax audit. What is meaning of tax audit? Why do we do tax audit? Tax audit is a specialized audit or statutory audit carried out by the tax official on the book and records of the taxpayer. Tax audit is required by the law. It's stated, Constitution said it, that tax authority must carry out that tax audit. Why do we carry out tax audit? Because taxpayer file their return based on self-assessment. Self-assessment means taxpayer, they are the one that compute the tax that they pay by themselves. How will tax authority know that this tax that this taxpayer pay is the right tax? Or how do we know that the taxpayer have not understated their income? Is by carrying out what? Tax audits. To review the taxpayer book and records to determine the true state of their tax affair, or to determine the true state of their tax liability. So that is what is called tax audits. Objective of tax audit. Why do we do tax audits? What are the objectives of tax audits? Objective of tax audits. Why do we carry out tax audits? Number one, adequate account book and record exist for the purpose of determining the taxable profit or loss of the taxpayer. That is one of the objectives of tax audits. Another objective, to discourage tax evasion. When we do tax audits, it will discourage tax evasion. Anybody that want to practice tax evasion, when we discover through tax audit, they will pay penalties and they will also pay fines. They will pay interest. Also to detect and correct accounting error, accounting and arithmetic error in tax return. When the taxpayer is doing the tax return, that self-assessment return, he or she may make one or two error. So for us to correct such kind of error, we have to carry out tax audits. We have to carry out tax audits to provide avenue to educate the taxpayer. How can you educate the taxpayer on recent changes in tax law? We can make use of tax audit because that tax audit, tax official will be reviewing the record. At that point, they will be educating the taxpayer on new development in the tax law, on new way of computing tax. This way you use, they are not using it again. These are how they do it. Oh. It is very, very important. To identify cases of tax fraud and recommend investigation. To identify cases of what? Tax fraud and recommend investigation. Also to provide feedback to the management on various provisions of the law and recommend possible changes. How can tax authority get feedback? How can tax authority get a response on how the taxpayer feel? It's through tax audit. By the time you went to go and meet the taxpayer, you read the record. Taxpayer will tell you their own mind. They will tell you what you need to do to improve revenue, what you need to do to encourage them paying tax. When you get all this, by the time you get back to the tax office, you table it to your management. So all these are objective of tax audits. To encourage voluntary tax compliance too is objective of tax audits. To encourage voluntary tax compliance too is objective of tax audits. So all these are objective of tax audits. Now, let's look at type of tax audits. What type of tax audit do we have? Type of tax audits. Tax audit is divided into two. We have desk audits and field audits. We have desk audit and field audit. Desk audit simply means a tax audit that is being carried out in the office of the tax official. In this desk audit, the tax authority, they are not going to the premises of the taxpayer. They do the tax audit in their own office. Desk audit. Our annual return, company annual return, private company income tax annual return is through desk audit. When you submit your annual return, tax authority have to review it. Mind you, tax audit. Another type of tax audit that we have is field audit. Field audit is carried out in the premises of taxpayer. In this case, the tax authority will go to the office of the taxpayer. They will go and carry out the field audit. They will field audit is more encompasses than desk review. It's more detailed. It is more details than desk review. Field audits normally cover more than 1 year. It can be 3 years, it can be 5 years, it can be 7 years. In field audit, the tax authority will leave their own office. They will go to the office of the taxpayer. Taxpayer will give them opportunity to access the book and records. They will give them the book and records. They will review the accounts. So that is there's field audits. And if you want to carry out this field audit, what are the stages involved in carrying out field audits? Stages involved in carrying out field audits. A tax authority, they want to carry out field tax audits. They want to go to the premises of the taxpayer. What are the stages? Stages one is selection of the taxpayer to be audited. You select the taxpayer to be audited. This is the company I want to audit to. Selection of the taxpayer to be audited. How do we select taxpayer to be audited? There are some criteria in selecting taxpayer to be audited. There are some criteria in selecting taxpayer to be audited. One of the criteria is you look at self-assessment return. Which taxpayer have submitted their self-assessment return? If anybody has not submitted their self-assessment return, if any company has not filed their self-assessment return as at the due date, which is 30th of June of the following year, if a company have not done that, it means you can write letter to them that you want to go and do tax audit, and you go to their premises. Again, taxpayer application for tax refund. Taxpayer, they apply for tax return. Maybe they have paid a lot of withholding tax
they have excess withholding tax. They now said, I want to apply for tax refund. I've overpaid tax. Tax authority come and pay me back my change. But it's allowed by the law for taxpayer to apply for tax return. And if tax authority see that this tax return is genuine, they will refund the taxpayer. But if you, taxpayer, you apply for tax return, indirectly, you are calling for tax audit. By that time, they will come and audit you before they can say they will give you refund or not. They would like to know whether that refund that you are claiming is true or false. Taxpayer with new returns is one of the criteria for selecting two taxpayers with new returns. Some taxpayers, every year, when they are filing their account, every month, when they are filing VAT, they will be filing new return, new return. And such, when a company do that for more than 4 years, you do not declare turnover. You are filing new return. This company still exists. Why they did not declare turnover? That one to question the intelligence of tax authority. By that time, they will say, okay, let me select this company. Let me go and audit them. So those are the criteria for selecting taxpayer to be audited. That is stage number one, selection of taxpayer to be audited. Stage number two, preliminary review of taxpayer file. Preliminary review of taxpayer file. We know we are talking about stages involved in tax audit. After you have selected taxpayer, the company you want to audit, you now go in the tax office. Every taxpayer have a file in the tax office. Every company, they have a file. You, the tax authority that you want to audit, and the team that want to audit that company, they will not go and carry the file of the company. They will not be reviewing it. So that they will look at the history of the company. They look at the last time they have conducted tax audit on the company. They look at what is the final solution, what is the final assessment that results that they agree on when they conducted the tax audit in the last time. They look at the company history. They look at the company turnover. So preliminary review of taxpayer file is very important. After you review the taxpayer file, you understand the company very well, you, the tax authority. The next stage is to notification of the taxpayer by writing letter to them that, so company, we are coming to your company by so date. We want to come and do tax audit. In this notification of the taxpayer, you also state the document that you are required from the taxpayer. You also state it for them. After that, pre-audit meeting, before you start the tax audit, you do pre-audit meeting. You call the top official of the company. You introduce yourself to them. They introduce that this is the CFO, this is the managing director. You know them in the pre-audit meeting. After you do the pre-audit meeting, the next stage is field audit, the actual field audit. This field audit now is for you to now say, okay, give me your book and record, give me this document, give me your bank statement, give me this. You review. In the point of your review, you will come up with a report. After you finish your field audit, you do post-audit meeting. You tell them, I finished my audit. This is the outstanding document remaining. Before I conclude my report, I would like you to submit those outstanding documents so that I can incorporate it in my reports. Post-audit meeting. After the post-audit meeting, you give them interim audit report. You show them, you submit an interim audit report to them. I've finished my review. This is the liability, additional liability I think your company will pay. That is interim audit report. Post-audit review. Post-audit review means another team in the FRA, they have to review the work that you, the tax authority, you, the team that you do the tax audit, some other team have to review your work too, so that they know that what you arrive at is true and fair. You have not manipulated anything, or they can use that to detect that whether the company has not bribed you, whether the company has not and has not give you PR, so that you want to reduce the tax liability. After that reconciliation meeting, you invite the taxpayer. This is the amount I said you come and pay. This is your tax liability. During the reconciliation meeting, taxpayers too, they will come up with their own evidence. They will come up with their own. They will come with their own that this is what we feel that is additional liability. They will come up with their own reports too. You look at it in the reconciliation meeting. In the reconciliation meeting, you now agree it. Okay, and based on this, I've removed this for you. I've removed this for you. This is your final tax liability. Final audit report. After you finish your reconciliation meeting, you write the final report. So please, ladies and gentlemen, let's monitor these stages involved in feed tax audit. You may be asked, explain or list the stages involved in feed tax audits. So please, let's try to monitor that. So after that, you select the company you want to, which I've said. Now, if you want to do this tax audit, what are the checklists? The first day that you want to do this feed tax audit, there's a form that you need to give taxpayer for taxpayer to fill. The essence of that form is to know more, to get the updated information on the taxpayer. So that form is called tax audit checklist. The list of information in that form include the following: the name of the company, the register address of the company, the business address, the date of incorporation, the date of commencement, the tax file number, the nature of business, the share capital. Do you understand? The shareholding structure, the name of directors, the banker's address, the accounting year end. All these are the tax audit checklist. As a good tax student, you need to know at least 10 tax audit checklists. 10 tax audit checklists. After the tax audit checklist, list of required documents for FRS tax audit. If FRS want to do tax audit, what are the documents that they will require from the taxpayer? Number one, audited financial statement. They will ask for that. Audited account for the relevant year. Management accounts too, they will ask for that. They also ask for chart of accounts, general ledger. Aside that, they'll ask for bank statements, sales invoice, purchase invoice file, payment vouchers, petty cash book, import documents, evidence of payment of your VAT. They'll ask for that. Evidence of payment of your company contact. They'll ask for that. Rent agreement. Please give us your rent agreement. The purpose of your rent agreement to look at, is your landlord, the landlord of your company, is he individual or corporate organization? If it is corporate organization, it is mandatory for you to deduct withholding tax. If you don't deduct withholding tax, you are the one that will pay the withholding tax. So these are all the list of documents required for FRS tax audits. So it is good for us to know at least 15 of it. Withholding tax file, import documents, export documents. So please, let's know that. The next thing is the list of requirement documents for state internal revenue service tax audit. If LRS want to do that tax audit, what are the list of requirement documents? They also ask for audited financial statements, staff lists with their destination. They'll ask for that. Give us the list of your staff with destination. They'll ask for trial balance. They'll ask for your payroll. Your payroll, you differentiate it, both local and expatriates. They'll ask for that. Evidence of business payment of business premises, evidence of payments of development level, evidence of payment of payee on a monthly basis. They'll ask for that. They also ask for evidence of registration with pension fund administration. They'll ask for that. They'll ask for evidence of registration with NHF and NSITF, because all these pension, NHF, NSITF, they are tax exemption. You use it to reduce your personal income tax. So for you to use it to reduce your personal income tax, tax authority must be sure that truly you are paying this, truly you are paying pension, truly you are paying NHF, truly you are paying NSITF. All these, they are the documents that they will ask for. They also ask for rent agreement too. LRS to ask for rent agreement. Schedule of withholding tax pay, they'll ask for that. Name and address of director, they'll ask for that. So all these are the documents required. I mentioned more than 30. So it is advisable for you to know at least 10. At least 10. So those are the documents that they will ask for. Now, we have done with tax audit. Let's go to the other man called tax investigation. The other man called tax investigation. What is tax investigation? Investigation is carried out when a taxpayer is suspected to have committed tax fraud. When taxpayer is doing tax evasion, for us to, when we now detect, the exercise we carry out is investigation. Investigation is more detailed than tax audit. When they are doing tax investigation, tax authority come with law enforcement agency. In tax investigation, tax authority will come, they can come with police, they can come with EFCC, they can come with DSS, they can come with ICPC. When they are doing tax investigation, tax authority come with at least one law enforcement agency. They will come to your premises. So investigation is more detailed than tax audit. Investigation normally occur when they are suspecting you that this company, they are doing tax evasion, they are evading tax. And you know tax evasion is illegal. When you are doing illegal activities, tax authority will carry out investigation on you. Investigation is more detailed and more common. At the point of carrying out investigation, the principal officer of the company can be prosecuted, can be arrested and prosecuted. They can sentence them to jail during investigation. Example, a company that has been in operation for more than 5 years, big company, every year, they normally deduct VAT from the sales that they make. And every year, that VAT results into like 500 million every year. Can you imagine this company did not pay 1 naira VAT since they have started operation and they are deducting VAT? Such kind of company, they cannot do tax audit for them again. They will go and do investigation because such kind of company is a criminal act. So that is investigation when there is tax fraud. What are the factors that will lead to tax investigation? What factor that can lead to tax audit to say, I want to come and do tax investigation on this company? Failure to register for tax. When a company fails to register for tax authority has a right to say, okay, you have been in operation, you've not registered for tax, and you have been operating for more than 3 years, you're a criminal. So in that regard, we will do tax investigation on you. Refusal to submit to file tax return. When you refuse to file tax return, you refuse to file tax return. You do not file VAT as I did it. You do not file company income tax as I did it. All this, when you do that, it can result into tax investigation. Secondly, refusal to allow access to book and record. You refuse tax authority to have access to your book and record when they are doing tax audit. You did not give them any document. Out of those documents we list out, you did not give them. You are posting them. At the end of the day, they will write report that you are refusing to allow them. The next thing is the investigation team that will come. It's not tax audit team again. Tax audit team will pass your file to the investigation team because you allow them because they cannot do any job. You don't allow them to have access to your book and records. Another reason for that can result in tax investigation: denial of tax authority into the premises of the taxpayer. You refuse entry. You refuse taxpayer to. You deny them to enter your company. They came for post check or they are coming from tax audit. It will result in tax investigation. It means you have something you are hiding. So that one can result into tax investigation. Abusive of tax scheme. You are giving tax incentive. You now abuse it. It will result into tax investigation. So all these are the points. Negative media tax report about the company. Tax authorities see in the newspaper some negative reports about this company. Tax authorities can say, this company, and they are our taxpayer. Look at this report that this company, they are owing this, they don't pay this, they don't do this. It will result into tax audit. Whistleblower on tax evasion. Tax authority receive whistleblower reports. Maybe staff of the company, they are the one that went to tax authority. They noticed that this company are not remitting tax. So maybe the staff, they have sacked the staff already. Example of that, a staff that they sack and he has worked for a company for more than 5 years is the accountant of the company. He now realize that for the 5 years, the company did not pay pension for the staff. And they sack for the man to retaliate. He may went to Pencom office to say, I want to apply for my pension, 25% of my pension. He knows that the company did not pay. When Pencom now check, Pencom now see that they did not remit any pension for you. And you say, the man will say, but I worked for 5 years for this company. By that time, Pencom will launch investigation of the company as regards to pension. They'll go and investigate the company. So those are the reasons or conditions, circumstances that may warrant tax investigation to be carried out. Stages of tax investigation. What are the stages involved in tax investigation? Number one, surveillance reports or pre-investigation. When you want to do tax investigation on the company, you just don't go to the company. You need to go and carry out surveillance report about the company. Go and carry out background check on the company. You send people to the company first to discard as if they want to do business with the company. So you carry out surveillance on them. After that, notification of taxpayer. You notify them that I'm coming to do tax investigation. And tax investigation can result into the company to see, can result that tax authority will see the company They will suspend the operation of the company. They will lien the bank statement of the company. They have power during investigation. Money cannot come out again. Money can come in, but money will not come out. Fund will not come out from the bank statement. So you notify
The tax authority have such power
yes, they have
to that
some power.
extent. Wow.
Yes, they have it. They can write CBN to place lien on your bank account that you are owing tax. They have such power. They have done that in the past for so many companies.
Wow.
You don't have power to transact. Yes. You said Nawa. Why Nawa?
I don't know if they have such power.
They have such power. So after notification of taxpayer,
Hello,
the
sir.
investigation
Sorry,
committee,
sir. Can I
yes,
ask a question, please?
you can ask.
All right, I'm sorry. Okay, thank you for the opportunity. I've been unstable. I don't know if you've really listed out what I'm about to ask. But anyway, you're going to pardon me. You were talking before I left the class about double taxation, multiple taxation. So I want to know, are there practical ways to cure this problem? Because it's very alarming, especially for these motorists within this Lagos environment. They pay a lot of taxes. So what are the tax authorities doing to cure these issues, practical ways?
Practical way. Yeah. As at present, there is a committee working, inaugurated by federal government. We call them Tax Reform Committee. It's part of the mandate given to them that how can we harmonize all these different type of multiple taxes into one? Is one of the mandates. At the end of the report, when they finish their submission, the report will become a law. So maybe that one can stop all these multiple taxes. Again, there is need for the Manufacturer Association of Nigeria, MAN, to write letter on behalf of company by having a summit with tax authority for them to address all this issue of multiple taxes. Because let me be frank with you, multiple taxes, they are the ones that kill so many businesses in Nigeria, especially SME. They cannot sustain due to a lot of taxes. Even if they don't make profit, they will pay. Do you understand?
I understand you, sir. Yeah, I understand you. Can I still go a step forward?
Yes.
Okay.
You can still go
I think
forward.
at the same point you were talking about a manual way of paying tax and all of that. And then I think I've heard of Tax Promas before. As a digital platform where taxpayers can file tax returns, pay tax, apply and validate tax clearance certificates, among all of those. So how effective is Tax Promas? And then most of these, I like being practical, most of these motorists, most of these guys, commercial buses, how will they be able to use this platform in such a manner that the taxes they will pay will gradually reduce or drastically reduce to the barest minimum?
Thank you very much for asking. Most of these motorists, they make use of phone. I mean, some of them will they will have WhatsApp. Some of them have WhatsApp. Some of them have Facebook. How they operate the Facebook? What we need to do is we need to simplify this technology app of the task. The technology application for tasks should be simplified so that it can be easily understood by the taxpayer. It's just as if you are pressing your phone. All this, the use of technology with tax authority, we need to work hand in hand with some other agencies. They need to work hand in hand with NCCC, Nigeria Communication Commission, so that your tax system, your tax can be linked to your phone number. Do you understand? They can also work with NIMC, your NIN. Do you understand? So that it can be easy. So when you want to pay your tax or when they want to verify your tax, it's as they can press a code from your phone that to know that this man has paid so tax. It will bring out your name. Or if you want to pay your tax, they can link it to your bank account. That okay, I want to pay this tax. So simplicity. Simplicity is very key. So have I answered your question?
Very well, sir. Very well, sir. Thank you. I appreciate you.
Okay. Thank you very much. So the next stage is pre-investigation meeting. Pre-investigation meeting. Before they start the investigation, they have to do meeting with the managing director, financial director, to tell them the aims for coming for the investigation, what they want to do. They inform the taxpayer the purpose of the investigation. They confirm the background information. They familiarize themselves with the accounting system of the company. So all these are done through pre-investigation. The next stage of tax investigation is evidential audit or investigation. This one is talking about gathering of evidence. You have commenced the investigation now. You have not gathered your evidence from the book and record that is being submitted to you. You are gathering your evidence. The main source of document when you want to do either tax investigation or tax audit, that every tax authority will have to require after audited financial statement. Number 2 document that they will require is what? They will ask from the taxpayer is what? Who can answer that? Tax authority don't use such document to go. After your audited account, then they will be insisting, you must give us these documents. Which one is that? Your bank statement. Your bank statement. Even if you don't give them your bank statement, there's a new system going on now. Tax authority can have access to your bank statement through CBN. All what they need to do is for them to give CBN your taxpayer ID. Because every company now, CBN has the taxpayer TIN number, tax identification number. And BVN, CBN will send your bank statement to them. So as time goes on, there is no room, there will not be room for company for them to say they want to be hiding their income again, except if you don't collect the income through bank statement. Because through your BVN, they can get all your link of the bank statements, all the bank that you operate. Take for instance, for now, if you want to do tax audit, maybe you have 7 banks. You may say, okay, let's give them 3 banks. Time is going, work is going on, that they can link they can have access to all your bank statements, even before they come to your premises to ask for the bank statement. So evidence gathering is very important. Gathering of evidence. Case preparation. After they finish gather evidence, tax audit, tax investigation is not going to result into tax liability like that. No, it will result into case. When they finish the evidence, if the tax official that do the investigation and the law enforcement team feel that the evidence that they gather, actually you commit tax fraud or you commit tax evasion, they will do it in a case preparation. They will proceed to court. They will take you to court. They will drag the company to court. At the point of dragging the company to court, the managing director or the CFO, they may be arrested. They will be the one to be prosecuted. So after case preparation, arrangement, they have to arrange the company into, they have to arrange them to court, take them to court. So after that, termination of investigation. Court will decide if a determination of investigation depends on the final judgment by the court. You terminate your investigation. If court find that truly this company actually commits this tax evasion or tax fraud, they will find them and they will pay every tax. Some of the director may go to jail for doing such kind of thing. Termination of investigation. You terminate your investigation. So that is what we need to know on that. Second thing, we need to differentiate between tax audit and tax investigation. We need to differentiate between tax audit and tax investigation. Let's differentiate between tax audit and tax investigation. Number one differences is tax audit is routine, is usually routine, is mandated by the law. The tax investigation is not routine. Tax investigation can be carried out at any time that the tax authority feel like. It's not routine. For tax audit, they can say every 5 years, they will be carrying out tax audit on your company. That one is routine. The tax investigation is not routine. It depends on when they receive information about your company, that your company is doing any illegal means for not paying tax. Tax investigation work, the scope of tax investigation work is more wider than what? Tax audit. It's another difference. Tax investigation is more wider than what? Tax audit. It's more wider than tax audits. Secondly, tax investigation can result into tax investigation. Why do we carry out tax investigation? Because when there is tax evasion, but why we carry out tax audit is when there is tax avoidance. So when you want to differentiate, tax investigation lead to tax evasion. Tax audit lead to tax avoidance. It's another differences. Another difference is that the investigators, the tax inspector that carry out the investigation, he has a specialized knowledge or specialized training. For you to do tax investigation as a tax authority, you must have knowledge on what is called forensic investigation, forensic accounting, forensic audit. But for tax audit, you don't need to have knowledge of forensic investigation, forensic accounting, forensic audit. So those are the differences. So that is the differences between tax audit and tax investigation. So,
All right, sir. Sorry, sir. Just a minute, sir.
okay.
For the forensic audit, the knowledge we need to acquire to enable us carry on tax investigation.
Yes.
Is it the normal lecture we attend on our on a graduate level, or we need to do like a
No.
master?
There is a special workshop, special training for you to do a forensic audit now. The cost of the training is going to about $1 million plus or 1.5. Least you can get on forensic audit is 1.5. Do you understand? So forensic audit is not taught by ICANN or taught in your school. It's a special training. Do you understand? It's a special training.
Yes, I'm with you, sir.
So some of them are even online. Some school, some have some organization that they do forensic audit training. They have school in Nigeria. It's a special training. Do you understand? Federal government, FRS at the time, they have to send about more than 500 staff to abroad to go and learn forensic audit. And they spend about 3 years. So forensic audit is not our general accounting or this our general audit. It's more entailed. It's more entailed. So for you to know, it's not your general knowledge, sir. Do you understand? So maybe
yes,
after you finish your ICANN, you can go for forensic training, forensic accounting training. We call them forensic accounting and audit. There are some people that do it. It may be online, where it's very expensive. So for you to have a good forensic knowledge, you spend nothing less than 3 million. If it is in Nigeria. If you are doing online training, you pay in dollar. By the time you convert it, maybe like 5 million. But when you have such kind of knowledge, there are some organizations that need forensic accountants, that need the service of forensic auditors. So they are looking for them. Forensic accountant, they are very scarce. So assuming now you want to relocate to abroad, one of the courses that you can do to give you edge, because when you relocate to abroad, I'm not saying ICANN will not give you edge, but looking at the team, they don't need that. Do you understand? If you relocate to abroad, if you want to practice accounting, you want to practice audit, despite you have ICANN, it may be difficult. Except, say for instance, you relocate to America, you have to have CPA. You have to have their own professional accounting something. If you relocate to UK, for you to practice accounting in UK, you must have a CCA. Forget that they have a affiliation with ICANN. You must have that. It's a must. It's practical, I'm telling you. So most of people that have forensic accounting, they have an edge, because it's a specialized knowledge. It's a specialized knowledge. So any other question? Any other questions? Any query, observations? So we have done with that. Please, there are multiple taxes. I want us to read it very well. It's one of the current issues affecting Nigeria economy. Why prices of goods and services is going up. Like now, most of the cement in the price of bag of cement is going up. As it is now, it's about 13,000 naira. And in January, it's just like 5,000 naira. When they invite them today, federal government invite them, they said it's not their own fault too. The custom duty on most of the product that they use, that they miss with the cement is very high. Apart from that, some states collect multiple taxes from them. That is the reason why. So it's one of the current issues that affect businesses. So please, let's take note. This tax audit and investigation, it came out last direct, 15-mark question. If you have last direct question, check. 15-mark question come out through tax audit. 5 mark, they ask objective of tax audit. Another 5 mark, list of documents required for federal government FRS tax audit. Another one is stages involved in tax audit. 15-mark question. So I mean, I don't say tax audit will not come out, or it will come out, but it has come out last time. But we can know them. But if I were you, I will understand this tax planning very well too. I also understand tax investigation very well. Out of this one, I call it tax planning, tax audit, tax investigation. Audit has come out last night. Let's be watchful of investigation and planning. Let's be watchful of investigation and planning. If planning want to come out, they will not ask what is tax planning or list tax planning checklist. They will give a scenario case. That scenario case, they will say you are just like a tax consultant, and the company want to engage you for them to plan the tax. So how do you carry out the planning? They will give you some company. So you will be developing your case through all these things. You tell them, the company they must first of all list the approved taxes that they must pay. And you list out the approved taxes for them. This company must pay company income tax, value-added tax, education tax, police development levy, personal income tax. You list it. You see, another means of planning is the company you can mark this B and C together. They should time the acquisition of their fixed asset and disposal in order to gain capital allowance and balancing allowance. You do that. You develop it. It's not that you now write it direct. They will not ask direct question on tax planning. They will give you a scenario question. It can be a page. They'll tell you this company is facing this problem. But at the end of the day, what they center on is on tax planning. So you need to know at least 10 points here on how do we plan. Please, let's take note of that. Tax investigation too, let's take note of it. I'm not saying you should not read tax audit, but it has come out like that. So any question, any query, any issue, multiple taxes too. Don't use that to joke. Any question, any query, any issue. So in the absence of no question, no query, no issue, we can call it a day. So by next week, we will move to taxation of merger and acquisition. We still have insurance left under taxation of specialized business. I will still do that. So thank you very much.
Thank you, sir.
Yeah.
Thank you, sir.
Thank you.
Thank you, sir. Good night.
Good night.